Close your eyes and picture Canada's housing market. For some, it's the gleaming high-rises of downtown Toronto or Vancouver, where competition is fierce, prices soar, and buyers bid frantically. For others, it's the quieter streets of Winnipeg, Halifax, or Quebec City, where homes are more affordable, listings move at a steadier pace, and buyers feel less pressure. This contrast is not imagination, it's reality. Canada's housing market has become a story of extremes, often referred to as a tale of two markets. While headlines often talk about the national average, the truth is that regional differences are shaping the experiences of buyers, sellers, and investors in dramatically different ways. Understanding these differences is crucial for anyone navigating the Canadian real estate landscape in 2026. The big picture, a market that isn't uniform. The Canadian housing market is far from monolithic. Economic growth, population trends, and local policies vary by region, creating distinct market conditions. While some cities experience slowing sales and modest price corrections, others see continued demand and rising values. The national cooling of the housing market is real, but it is uneven. For example, Toronto and Vancouver, Canada's two largest urban centers, have seen slower growth, longer listing times, and declining sales volumes in certain segments. In contrast, many smaller cities and mid-sized regions, such as Halifax, Ottawa, and Edmonton, are experiencing relative stability or even modest growth. This divergence is at the heart of the tale of two markets. It illustrates that averages can be misleading. A single number representing the entire country cannot capture the nuance of regional differences. Urban giants, Toronto and Vancouver. Toronto and Vancouver represent Canada's most expensive housing markets. For years, these cities were characterized by rapid price growth, bidding wars, and extreme demand from both domestic and international buyers. However, both markets are now showing signs of moderation. In Toronto, home sales have fallen nearly 10% in early 2026, and condo prices have softened slightly. Vancouver has experienced similar trends, with price growth slowing across many neighborhoods. Several factors contribute to this cooling. High prices. Homes in these cities have reached levels that push many buyers out of the market. Interest rates. Mortgage affordability is lower than in past years, reducing the pool of qualified buyers. Investor pullback. International investors, who previously fueled demand, are now more cautious due to economic uncertainty. For buyers, this represents an opportunity to purchase in high-demand markets with slightly less competition. For sellers, it emphasizes the importance of realistic pricing and strong marketing strategies. Mid-sized and secondary markets. Contrast Toronto and Vancouver with Canada's mid-sized cities. Places like Ottawa, Calgary, Edmonton, and Halifax are seeing more balanced conditions. Demand remains healthy, inventory is manageable, and affordability is better relative to income. These markets are benefiting from several trends. Population growth, immigration, and interprovincial migration are driving demand outside of the biggest urban centers. Affordability. Homes remain more accessible compared to Toronto and Vancouver, attracting first-time buyers. Infrastructure investment, development in transit and urban planning supports sustainable growth. In these markets, homes are still selling, but the pressure is less intense. Buyers can negotiate and take their time, while sellers can expect fair, rather than extraordinary, offers. Rural and emerging markets. Beyond mid-sized cities, Canada's smaller towns and rural areas are also experiencing growth, albeit in a more subtle way. Communities in Atlantic Canada, the Prairies, and Northern Ontario are seeing increased demand from buyers seeking affordability, lifestyle changes, or remote work opportunities. These areas often feature lower prices. Housing is more affordable relative to local income. Stable markets, fewer speculative buyers and investors create more predictable conditions. Lifestyle appeal, remote work and quality of life considerations drive interest. While these markets are smaller in scale, they represent important opportunities for buyers, particularly first-time homeowners or those seeking less competitive environments. The factors driving regional differences. Several factors explain why Canadian housing markets diverge so sharply. Economic conditions, job growth, wages, and local industries influence housing demand. Cities with booming tech, finance, or energy sectors often see stronger demand. Supply constraints. Urban centers face land shortages and complex zoning regulations, while smaller cities have more room to expand. Population trends. Immigration and internal migration patterns vary by province, affecting housing pressure. Policy and taxes. Local property taxes, foreign buyer regulations, and development policies can significantly influence regional market behavior. Why this matters. Understanding regional differences is crucial for anyone involved in real estate. Investors must assess which markets offer growth potential. Buyers should consider where they can afford homes without overextending. Sellers need insight into local market dynamics to set realistic prices. Failing to account for these differences can lead to poor decisions, from overpaying in a high-priced city to underestimating the potential of a growing secondary market. The tale of two markets in 2026. Canada in 2026 is a perfect example of a tale of two markets. On one side, high-priced urban giants are moderating, offering opportunities for cautious buyers but challenges for sellers used to a frenzy. On the other side, mid-sized and secondary markets offer stability, affordability, and steady growth. This duality creates a dynamic real estate environment. Strategies that work in Toronto may fail in Halifax, and tactics that succeed in Calgary may not be relevant in Vancouver. Recognizing this is key to navigating the market successfully. Conclusion: navigating a diverse landscape. Canada's housing market is no longer a single story, it is a mosaic of regional narratives. Understanding the differences between major urban centers, mid-sized cities, and smaller communities is essential for buyers, sellers, and investors alike. The tale of two markets teaches an important lesson: real estate decisions cannot rely solely on national averages or headlines. They require attention to local conditions, trends, and forecasts. In the end, Canada's housing market reflects the country itself: vast, diverse, and full of opportunity. Those who take the time to understand its regional nuances are best positioned to make informed choices, whether buying their first home, selling a property, or investing for the future. Because in a market defined by contrasts, knowledge is the ultimate advantage, and understanding the tale of two markets may be the key to success in Canada's real estate landscape.